Good evening, everyone. I am Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Nisus Finance Services Co. Limited. Today, we will provide a brief overview of the company and its innovative business model. Nisus Finance Services Co. Limited, founded by Mr. Amit Goenka and Mrs. Mridula Goenka, specializes in fund and asset management and capital markets transaction advisory. With a decade-long presence in India, it manages AUM worth approximately INR 1,000 crore for financial year 2024 by providing innovative structured solutions to developers and asset owners in optimizing their balance sheets and efficiently acquiring, developing, and managing products and properties. The transaction advisory business craft solutions that align with the long-term business plan of our developers by facilitating capital partnership, delivering increased value to both clients and investors. From management team, we have Mr. Amit Goenka, Chairman and Managing Director. Good evening, Amit sir. Welcome.
Evening.
Mrs. Mridula Goenka, Executive Director. Good evening, ma'am. Welcome. You're on mute.
Hello, good evening. Thank you. Thank you for having us here, Vaishnavi.
Welcome. We also have Mr. Sunil Maheshwari, Chief Financial Officer.
Hello, hi everyone.
Good
Hi.
evening, sir. Welcome. And we have CA Yogesh Jain, Director of D-Line Capital Advisors Private Limited. Good
Hello
evening,
everyone,
Yogesh.
welcome you all. Yes, thank you Vaishnavi. Hello everyone, welcome you all for the investor meet.
Yes, now we will play a short AV about the company. Let's start.
We welcome you to Nisus Finance Services Co. Limited, which specializes in urban infrastructure financing and asset management. For over a decade, we have transformed India's urban landscape, empowering growth with custom-designed cutting-edge financial solutions. Operating under the trusted NIFCO brand, we specialize in identifying and investing in attractive, high-yield opportunities. At NIFCO, we believe in curating structured investments that drive growth, innovation, and sustainability. With an AUM of over rupees 1,000 crore, we utilize our deep expertise and data-driven insights to deliver superior risk-adjusted returns to our stakeholders. Our core business focuses on two verticals: fund and asset management and transaction advisory services. We manage high-performance funds investing in the residential, commercial, and industrial real estate sectors, creating impactful financial solutions for the industry today. Nisus Finance Services Co. Limited is led by our Managing Director, Mr. Amit Anil Goenka, and Executive Director, Mrs. Mridula Amit Goenka, who have over 15 years of combined experience in real estate financing. Mr. Amit Goenka is an engineer MBA from the USA who oversees fundraising and deployment, while Mrs. Mridula Goenka is a CA who manages finance and taxation. With a presence in key emerging global financial hubs, including Mumbai, Gift City, and Dubai, we are poised to capitalize on global private capital and international alternate investment opportunities, expanding and enhancing our portfolio's horizons, strength, and resilience. We have been honored by prestigious institutions from Naredco to RICS to the UAE's CEO Club Network for our contribution to real estate finance in emerging markets. We remain committed to delivering above normal value to investors while ensuring robust governance and a transparent, client-focused approach. Nisus Finance Services Co. Limited, financing the future today.
Thank you for watching. Now I hand over to Amit sir to give a short intro about the company and its future plans. Over to you, sir. Thank you.
Thank you very much, and a warm welcome to everybody in our today's IPO meet. My name is Amit Goenka. I'm the Chairman and Managing Director of Nisus Finance. Nisus Finance was founded in 2013, and over the past 11 years, we've charted a very unique journey within the financial services domain. We have been predominantly known to be a stellar fund manager with multiple licenses as a Category 2 AIF, starting from 2014 to current, having three licenses already obtained, one of which was already delivered, to a license in Gift City, to now a license in DIFC UAE. We have been at the forefront of providing cutting edge capital solutions to urban infrastructure development opportunities pan India. Today, we are present across 9 cities. and growing to potentially 30 cities in India. Our solutions are aimed at, and our investments are aimed at, helping those worthy and capable development companies who are engaged in cutting edge and contemporary developments, including residential, commercial, industrial, retail, education, and warehousing data centers, and so on and so forth, which form the heart and core of any urbanization program for the geographies of India. We have furthered our footprint with our new investment strategies and solutions in other emerging markets, starting with the UAE in the GCC and expanding our footprint thereon. We are hugely complemented by our advisory services, which act as the backbone for investments. It is no surprise that when we receive over 400 potential investee opportunities in a year, we are hardly able to cater to less than 5% of them, with the balance 95% still having a very huge opportunity to transform their landscape, but with our advisory solutions, which would include finding new joint venture partners, divesting non core assets, recapitalizing their balance sheets, to restructuring their debt, or even restructuring the companies. So it's a very extensive solution provided by our advisory services. We're able to work not just with our investee companies, but also those who could not get an investment from one of our funds. With that, I welcome you to an exciting journey. As Vaishnavi rightly mentioned, we had clocked over 1,000 crores of AUM as of March 2024 and are poised to grow at over 100% year on year, given the current spate of capital, the current number of licenses and opportunities that we are currently into, thereby having the twin engine both for advisory services as well as for our investments over the next few years. Thank you, Vaishnavi.
Thank you so much, Amit sir. Let's start with the company presentation.
Certainly.
Over to you, sir.
Thank you so much. As I mentioned, an urban infrastructure. We're a leading urban infrastructure financing and asset management company through our various fund pools, which have been raised currently from some of the most well-known individuals, family offices, corporates, and institutions in India. We're today setting our footprint to raising capital in globally to other investors which are joining us through our various pooling structures internationally. Next. We have been rated excellent by CareEdge Ratings for creating an outstanding outcome for each of our funds, to having measured up on all aspects of governance, reporting, and transparency, apart from good performance on our funds, which has given us an excellent rating by CareEdge Ratings. We aim to be the most admired alternate asset manager. As we know, alternate asset management is one of the fastest growing segments in India, as AIF grows at a breakneck speed of over 40% year on year, compared to low teen growth or growth of mutual funds on a larger base at about 12-13%. So we do aim to be the most admired alternate asset manager in India, not just for India but for emerging markets, and create very curated investment solutions and investment opportunities for domestic and global investors for India. Next. We started 11 years ago. We predominantly operate across two diversified business lines of investments and advisory. Our AUM was 1,000 crores and growing. We are present across the financial locations of Mumbai, GIFT City, and DIFC, with a present team size of over 34 and growing. We clocked over 42.24 crores of rupees of revenue and 22.87 crores of PAT, thereby delivering over 50% PAT margins and growing. Uh, the first quarter showed a robust, on an annualized basis, a robust 50% growth and growing, as we continue to grow in the further quarters this year with a reasonable ROE and ROCE. Next. This is our 10-year track record. We launched the first fund in 2013, started investing in 2014, exited that in 2019-20, launched the second fund in 2019 as a joint venture between the Dalmia Group of Delhi as a Dalmia Nisus fund, which is a standard credit fund, a 500 crore offering, which we have invested from 2020 onwards. Further, we launched a special situations fund in 2022, which was raised, capitalized, and started investing in 2023. It's a 1,700 crore fund offering. And finally, we have started investing through the UAE by taking a license in GIFT City in 23 and a DIFC license in 24, and have started investing in the UAE through the DIFC license. So this has been a journey in all of these investment pools. We are obviously having a very strong engagement with our advisory services across the life cycle of these funds. Next. We have been honored by several industry bodies, and we continue to play an active role with all industry bodies from CRIDI to RICS to GRI to FICCI to CII to IMC and others. And we've been awarded several times for our extraordinary performance and contribution to financing urban infrastructure over the years. Next. This is our organogram. We are largely composed of the holding company, which is looking to go public, called Nisus Finance Services Co. Limited, or NIFCO, as we like to call it, where the income from advisory services is booked. So all advisory services and people from advisory services effectively generate revenue at the whole co level. Then we have multiple other associates and subsidiaries. As you go from the bottom, Nisus BCT Advisors is the fund manager for the Special Situation Fund, which is a 1700 crore offering and has started investing since 2023. Above that is Nisus Finance Investment Managers, which is the promoter with a license in GIFT City, which further has a subsidiary, which is the manager for the DIFC license. So investors from India are able to invest in dollar terms in GIFT City under the OPA route, which further gets pooled into the GIFT Dubai DIFC fund, which is investing in the GCC currently. Above that is Nisus FinCorp, which is the NBFC, which acts as a sponsor to various funds and is an investment vehicle. Above that is Dalmia Nisus Investment Managers, which is a 500 crore standard credit fund, which was launched in 2020 with its first investment and continues to make investments. And of course, there's a smaller investment company, which is an opportunistic investment company. Next. We've always been led by a very experienced and a very stellar board. We've always been run very independent, not just with management, but and great professional teams, but with one of the most spectacular independent board members, as well as very strong investment committee members. We have Ms. Tara Subramaniam, one of the co-founders of HDFC Limited, Mr. Tuteja, who sits on various boards of various large listed corporates, and Mr. Sunil Agrawal, who's an expert in real estate, finance, and other sectors, apart from the core management which sits on the board. So it's run very independently by a set of very strong professionals and independent directors. Next. It's an integrated and a twin engine business model wherein one third of the revenue has traditionally come from our fund pools and our asset management businesses, and two-thirds of the revenue has come from advisory services. Advisory services able to create a fee on the total value of the transaction, not just the invested capital, whereas the invested capital as a percentage of the money employed is what we earn as recurring management fee. There's also a component of profit share or carried interest, which gets periodically. We expect almost about 6 to 8% of the total AUM managed by us to be returned to us as profit share, which occurs every fourth or fifth year. That is not currently part of our revenues and will occur in the next cycle of 27-28 as the first set of funds get wound up. There's a very strong synergy hence between transaction advisory and fund and asset management, which is able to cater to the entire ecosystem of built environment and addresses all the asset classes pan India in creating meaningful capital solutions for their development projects. Next. Currently, three funds as I described. To the right is the Dalmia Nisus Standard Credit Fund, a 500 crore offering. The center is the Special Opportunities Fund, which deals with special situations and distressed assets, a 1700 crore offering. And finally, we have the Dubai Fund, which is to GIFT City and the IFC, which is a $250 million fund. So cumulatively, we have roughly about 4,500 crores, which can be deployed through these various schemes, which are currently ongoing. Next. The advisory services obviously caters to the entire gamut of activities, right from equity infusions to structuring credit and syndications to providing joint ventures and joint development opportunities with other larger players to divesting land banks for warehousing and data centers to other assets and creating other asset monetization solutions so as to be able to bring equity and capital back on the balance sheets of capital seekers and investing companies. So it's a full supply chain and a value chain of all services end to end for all sorts of development opportunities and all sorts of asset classes pan India. Next. We're very centric to our ecosystem. We've always aligned. We really don't believe we have any competition. Most NBFCs, other funds, ARCs, and other financial institutions have partnered with us from time to time across our transactions. and have tried to make it a more impactful and a more meaningful capital solution for investee companies. Hence, we are very centric to the entire ecosystem, which comprises of other financial institutions and capital contributors, regulatory bodies, industry bodies, and influencers, other institutional investors in India and abroad, to obviously all the developers pan India, to obviously the the other stakeholders, including advisors, IPCs, and other firms which are engaged in advisory services. Next. These are the performance of the three funds. The first fund, as I said, the current ongoing fund is the Nisus Credit Opportunities Fund, which has been generating and returning almost about 5% every quarter with a 20 IRR. It's a fixed income fund. The second fund is a special situations fund, which is generating over 24% IRR with quarterly distributions as part of the special situations, which is again an ongoing fund of 1,700 crores, of which hardly a percentage of that is being deployed and needs to continue to be deployed in the coming years. And finally, the third is the Dubai Fund, which is expected to generate dollar-denominated returns of 22% through rental yielding assets in the GCC. So these are the three current funds which are under operations, and we're hoping to expand the AUM with the target size of each of these over the next couple of years, effectively trying to take it to the entire scope of 4,000 crores of deployment over the next couple of years, and be able to generate a corresponding revenue and PAT from these fund pools. Next. How we've differentiated ourselves significantly with other players by doing short ticket sizes of less than 20 or $30 million, dealing with pan India and across asset classes. They most tend to focus on a few cities. We're dealing across cities, across development asset classes, and across developers and opportunities. Today, we're in Indore, we're in Surat, we're in Ahmedabad, and looking to go to other cities outside of, and not just present in Mumbai, Pune, Hyderabad, Chennai, NCR, etc., but present in the emerging metros of India as well. So we differentiate ourselves by a deep presence, by a quick solutions, by short investments and quick turns of cycle within our investments, and quick exits, and be able to constantly churn our capital within a fund pools. Next. We exited the first fund we started in 2013, which we started to deploy from 2014 with a 21.3% exit, which has caused, and of course, the continuing performance of the funds, which has caused all our investors to stay with us for several years now, over 10 years, continue to re up their commitments and adding more friends and family to our fund pools. Next. We focus on our strategic imperatives, which is firstly and squarely faced on risk management and governance, to creating value across our fund pools, across our business lines, with a very clear strategic intent, creating a very clear blue ocean for ourselves, therefore not really having to compete either in terms of value or in terms of returns. Our investment focus remains very squarely sharply on urban infrastructure opportunities with a growing asset under management year on year. Next. This is the breakup. As you can see, the advisory services have constituted almost about two-thirds, or actually 70% of the revenue last year, and continue to provide a very significant revenue pool year on year, which is directly correlated to our AUM. We expect that ratio to shift slightly as we grow multifold time in the AUM, and maybe rest at about 55 to 60% coming from advisory services, and almost 45% coming from asset management services, which is a recurring income with a very significant carry. So this is the breakup of our revenues. As you saw in quarter one, we have clocked a higher revenue, and we continue to do that in subsequent quarters this year, and with a very strong, clear growth trajectory path as we continue to employ more and more capital towards meaningful opportunities pan India as well as in other emerging markets. Next. These are operational KPIs. Our investor base has significantly diversified. We have now investors not only just pan India but coming from global markets as well, which is why our AUMs as well as our deployments are able to increase across multiple fund strategies. So from being a single fund manager, today we are a 3-fund manager. Next. The dynamics of real estate are known to us. India's real estate has been one of the fastest growing asset classes for the last few years, driven by consumption across all asset classes, led by residential to commercial to data centers, warehousing, retail, etc. We are slated to develop over $1 trillion of assets over the next 5 to 6 years, up from $350 billion of assets currently. Therefore, having a very clear growth trajectory in terms of the total development potential required to serve the cities of India and the capital needed to service them. Next. Everybody knows about the trends in real estate, and that's why it becomes a major driver, because to be able to achieve these kind of numbers, volumes, and development opportunities, and this is just in terms of residential, but look at other asset classes, including commercial, etc., as well. It will be able to. It's a very clear line of sight in terms of the total demand of capital. Next. The IF industry is so urbanization is one of our major drivers. So we have twin growth engine behind us, which is giving us huge tailwinds. The first is the urbanization speed. With every, it is assumed that, or it is estimated that with every $1 billion of allocation towards core infrastructure, let's say an airport, there's correspondingly $30 billion, which is invested into peripheral urban infrastructure developments, including housing, commercial, retail, hospitality, etc., which is where we participate. Given the spate of urbanization and the spate of construction of roads, airports, to railheads, to railway networks, etc., clearly the need for capital across India is very, very large. So urbanization is one of the largest growth drivers for us, and will continue in our view for the next 10 years, given the entire clarion call for being a Viksit Bharat, for having an Amrit Kal 2047 vision in mind. I think that's where we are squarely poised to go. The second engine of growth is obviously the AIF industry. AIF industry, as I mentioned, is going at a breakneck speed of over 40% annualized CAGR from a current base of less than about 15 lakh crores. It is poised to reach the mutual fund industry mark of about 66 lakh crore rupees currently over the next 5 to 6 years. So it's at a very high growth speed, which is where the pooling of capital is happening. As one of the managers who had a very has a very satisfactory and a very exemplary track record with good ratings, we are seeing a lot of capital coming in our favor from both domestic and international investors who would like to participate through AIF pools into the opportunities in India and other emerging markets. So AIF becomes a very large driver of growth for us going forward. Next. Obviously, you would have just read this week that in H1, the largest contribution amongst all AIFs was for real estate within category 2 AIFs, which is the largest amount of capital raised within AIFs is in category 2 AIFs. And within that, real estate is the largest contributor of capital, which is where we are squarely placed. So obviously, we're at the top of the pile when it comes to capital allocation within AIFs in category 2 real estate. Next. We talked about the GCC, and GCC presents a very unique opportunity. It's an anti-fragile. We know UAE is an anti-fragile economy with geopolitical shifts. It has been obvious that over the last 2 or 3 years, there's been a significant amount of capital infusion, a significant amount of migration, and therefore a significant need for emerging managers like ourselves to be able to provide investment solutions for global capital as it is walking into India, since especially it comprises of a very large Indian diaspora as well as interest from resident Indians to invest in that region. So therefore, it was an obvious step for us to move to that region and also offer the solutions that we've successfully managed and executed over the last 10 plus years to take it to that region through the IFC. It's a high exponential growth market where the sales in one emirate alone is nearly equal to the total amount of sales that India does in a year. Next. Yeah, these are some of the ratios of total income, of PAT, of EBITDA, and PAT margins, which are in front of you. Because we have no other further leverage, our operating leverage is fixed. We've always maintained a very high operating base with the growth of AUM that is getting amortized. So now any additional revenue is likely to go and hit the PAT margins, and therefore we're expecting to maintain the margins going forward over the next couple of years. Next. These are some of the key ratios. And this is your profit and loss statement year on year, showing the revenues and PAT margins and PAT. This is a balance sheet as of March 24 and as of the first quarter. So these are our key drivers for business growth and what is causing us to come to the markets. First is we need to expand our footprint across India as well as in new emerging markets like the GCC, and create more strategic tie-ups the way we have with other institutions, with partners in every fund, which means also we need to expand our advisory business to pan India as well as to other emerging markets, which we've already started, and improving our investor relations with global fund allocators, which we've also on a roll off, which is why we're raising money to pay the distributors. So that's our capex. So we'll continue to have a wider audience as investors within our funds. Product development is a very important part. Whenever we come up with a product, we spend 4 years researching a meaningful investment strategy, eventually launching it and propagating it. We're now gearing to launch additional funds next year. And so, therefore, product development becomes a very important part to curate unique investment strategies which have a very large addressable market and can become a very significant opportunity as a blue ocean for ourselves. Uh, People are our biggest strength and skills. We have one of the highest performing teams in India with all skill sets, including MBAs, CAs, CFAs, chartered account engineers, architects, marketing professionals, credit professionals. So we have a very strong team which can handle everything from origination to underwriting to execution to advisory to asset management, exits, etc., and technology. And we wish to continue to retain and grow their skill sets over time. And obviously, finally, we're looking at expanding our customer base and maintaining this diversification of revenue, which is by different products, by different geographies, by different opportunities and different business lines in India and other emerging markets. So these are the competitive strengths. A strong brand presence. Lifco as a brand is known in the urban infrastructure and in the built environment very prolifically throughout India, since given our contribution has been well recognized and we are very squarely engaged with all stakeholders. We identify trends early on, which is why we've never had challenges with our investment, despite having NBFC failures starting from 2017-18 and so on and so forth, and consolidation among all stakeholders, whether it's developers to capital providers to banks to NBFCs to other funds. We've only grown with time because of our depth in our asset strategies and our identification of the right trends, to very strong management of our assets and investments, very, very transparent and prudent governance and integrity, and a diversified business model. So they continue to be a competitive strength, which will build on significantly. Next. That's a SWOT analysis. Next. Yeah, this is a framework with which you're going to grow diversified revenue streams, competitive strengths, robust financial growth, resilience and risk management, to leadership in our space, a very strong tailwind with positive market trends, and a significant growth potential behind us. Next. That's the issue highlights. That's all from my side. Thank you very much. I mean, there are objects as well. I mean, are the objects here mentioned in the next slide? Yeah. So we're utilizing a part of our raise for getting additional licenses in Gift City, to taking our own license in DIFC, to getting licenses in Mauritius and other markets. As you know, this is a significant capex that you incur once, but you're able to create the right structures for global investors to come through these jurisdictions with our team's presence, with the licensing, with the infrastructure, with the compliance and other things squarely in place for us to be able to go to the next growth of management of these assets. Uh, the largest capex really, which occurs from time to time, is the fundraising cost, that is client acquisition cost. It's a one-time exercise. We've incurred it in early years of life when we started the first few funds. We obviously had these investments get amortized very quickly because whatever we pay, we're able to recoup in less than 18 months. But we'll have to raise additional $500 million. So we need to pay about 2% for raising this additional money from global investors, which we need to pay our distributors immediately so as to be able to get these investors to our various fund profiles. And of course, augmenting the capital base of the sponsor being Nisus FinCorp. So these are the key objects of the issue. Thank you very much.
Thank you, Amit sir, for the detailed presentation. Now we will start with the question and answer session. I request all the participants to post their questions in comment box. Thank you. So first question is from Mr. Arav Banerjee. What are the growth strategies for both transaction advisory and fund management?
As I mentioned, both are an interrelated business stream. The more the AUM in fund management, the more the opportunities for transaction advisory. Today, we are seeing over 400 transactions a year, given that we have two active funds. When we have a third active fund in Dubai, the number of transactions have only gone up, which means there are more advisory opportunities for them. Currently, as I mentioned, we have deployed just about 1,000 crores as of last year, given just the total of the three fund pools, 500 crores in standard credit, 1,700 crores in SEBI category 2 special situations, which is up and running. We already have within domestic pool, we have 2,200 crores of potential, plus another $250 million, which is through the Gift City Fund. That adds another capital of over 2,000 crores. So we have over 4,200 crores, which we aim to deploy over the next couple of years. thereby multiplying or quadrupling our AUM over the next couple of years as we put this capital to work. Therefore, significant growth trajectory on the fund management. This immediately translates to a corresponding opportunity for transaction advisory, which is going to work on the same strategies of helping helping those investee companies who are seeking capital from a special situations fund as well as from a standard credit fund or from the advisory services which are being offered now in the UAE, in the GCC, for those who are looking to sell assets but are not ready to sell those assets, or those assets are not easily transactable, and they need a solution. They need to be restructured before they can be sold in the marketplace. So those are the twin drivers. The strategies that we create for our investments have an augmented strategy with transaction advisory.
Next question. Ananya Swaminathan, are you also looking for an acquisition to expand business in India and Dubai and Mauritius?
We're always on the lookout for inorganic growth opportunities because, as I mentioned, consolidation has been the key driver. As you saw, that this sector is consolidating. I think most sectors post-COVID have started to consolidate. We've seen NBFCs consolidate or shut down. We've seen developers consolidate or other shut down, which is why the growth, revenue growth, and sales growth for most of the people who are larger players who have consolidated the markets in their favor have been growing at over 150 to 200% year on year. So obviously, acquisition becomes an important strategic opportunity. We're always on the lookout for such opportunities where we can consolidate some of the smaller players and bring them into our wings, both in India as well as in the markets of Dubai and Mauritius.
Next question. Vikas, under real estate finance, are you subscribed to debenture debt instrument?
Absolutely, absolutely. We're a credit fund, so as a credit fund, we cannot give loans. We will have to subscribe to some sort of a debt instrument, being convertible or non-convertible debentures, which are able to provide a quarterly coupon to our investors from time to time. And so that's really the business that we do in India. As far as the UAE is concerned, we're buying assets. So that's not a lending business. We're buying rented assets, and that's an equity investment that goes to buy assets, which is a levered buyout. So 50% of the money comes from local banks, and 50% is contribution from investors, including our own capital.
Okay. Next question. Amit Chaudhary, could you provide details regarding the litigation case?
So as you know, we are a fiduciary agent, and any delay in any repayment terms of our capital will lead to a certain amount of litigation that will try and enforce against the borrower. We've done that, but that matter is already settled, solved, and done and dusted with. So we've already filed for withdrawal of all the matters, which has been updated in the RHP. So there's no effective litigation really pending, which we need to initiate for recovery of our monies because we've got paid, our investors have got paid.
Okay.
That was a
Next
singular
question.
matter in the last 10 years. Yes.
Okay. Vihan Bhandari, can you elaborate on the functioning of the real estate performance fund?
There was a first fund which is called the Real Estate Asset Performance Fund. If you're referring to that, which is the first fund we started, which effectively invested 300 crore rupees and exited with 21.7% IRR. It has invested across development opportunities in Mumbai, Bangalore, Chennai, and other cities. That was exited in 2019-20. The second fund, which is the Real Estate Credit Opportunities Fund, which is a joint venture with Dalmia, which is Dalmia Nisus Fund, has invested its capital. It's getting a higher yield and is looking to wind up over the next 12 to 18 months. And the third fund is the Real Estate Special Opportunities Fund, which is the Special Situations Fund. Each of these funds identifies the opportunity. So today we have a standard credit fund, which is a performing credit. So any large development company which is seeking last mile capital to complete its assets will come to the credit opportunities fund and seek capital to complete it and exit these investments and monetize their investment. Whereas the special situations fund is a rescue finance vehicle. So we work very actively with ARCs. We work very actively with the largest fund of India called Swami Fund, which is a $2 billion fund under the SBI caps, where we are all co-investing. We lead the transaction, we underwrite the whole thing, we manage the whole AMC and the whole AUM of each transaction, where we're effectively helping any project which is stuck with a bank or a NBFC which is no longer lending. So we've helped those who are stuck with DHFL, to those who are stuck with Altico, to those who are stuck with other lenders, and rescued them from the books of these lenders, recapitalize the balance sheets, and ensure that they complete in a short period of time. Likewise, we've also helped some companies exit the rigors of NCLT, get recapitalized, and sell their assets to another large developer. So we're helping consolidate these high quality, high value, creative opportunities by putting in a fraction of the value of the asset. So let's say the value of the assets is $100, we're putting in $20 to rescue it and allowing the monetization immediately back to back with another large development company who's looking to acquire these assets. So as the market consolidates, the largest players today are looking to acquire these assets with our help. Because they're available at a discount, it allows them to grow without putting in too much capital to work. So we put that capital, we get the entire securitization of the assets and the cash flows along with corporate guarantees of the acquirer. So that has allowed us to generate a high return of over 24% in the special situations fund.
Okay. Next question. Anandi Mittal, what future growth as an investor we can expect?
Like I mentioned, the total fund base with the current state of funds and new funds are likely to get launched next financial year is roughly about 4,000 plus crores. We had only 1,000 crores as of March. So as I said, we're looking to quadruple our AUM. As we quadruple the AUM, as I mentioned, everything that we generate will also correspondingly grow in terms of top line as well as on the bottom line. So we're looking to almost grow at 100% pace year on year. So effectively, as of last year, if you were 1,000 crores, we're looking to grow at 100% pace this year, which will be reflected in our results, as well as further double down on that in the next financial year and so on and so forth. As I said, our site is not only in this current state of 4,000 crores of AMC that we're looking to manage, but further doubling on that with the capital that we're investing to raise new money for the strategies, and therefore almost further double on that. So the objective is that can we be a $1 billion opportunity set over the next 4 years or 3 years. So that's really what we're working for.
Next question. Devesh Purohit, what business risk you foresee and what remedial measures are in place to protect our investors in various funds you launched as well as your future investors in company?
Uh, Great question. Risk mitigation and risk management is our biggest asset and our biggest quality, which is why which is the reason why we are able to create solutions which are very defensive in nature. We're not equity managers. We don't invest into multiple businesses which invest or give high value multiples. It's a very defensive arbitrage opportunity. So what are we doing? We're really looking at securitization of cash flows. So lending to standard credit or lending in special situations, we see a short-term asset liability mismatch that is clearly available because it is not possible given the RBI guidelines for banks and NBFCs to do that. So that is clearly the regulatory arbitrage in our favor in India, because of which we're able to plug the short-term asset liability gap. Very high asset, very small liability required to meet and monetize that asset value, and that's really what keeps the money sharp. And again, we're turning it very fast. We don't let the money stay in with one investing company for too long. So we create a very defensive solution for investors in our various funds. Uh, in terms of protect investors in various funds, because as far as investors in the company are concerned, obviously, my entire wealth and the entire wealth of my family is invested in this company. I don't have any other holdings. I don't have any real estate. I don't have any stocks. I really don't have. As a family, we put our entire wealth into this company. We have worked very hard at this for the next 10 years. We will continue to do that for the next 10 years and beyond. So idea is to be able to create a value for ourselves with this company, grow it to unprecedented levels. Today, India, the positioning that we have, the tailwinds that we have with the growth in financial services and urban infrastructure, I think we're poised for a tectonic growth, for a very strong inflection point of growth, as the strongest managers in the country are getting the largest amount of attention, which has allowed us for the first time to actually grow and see global capital, which is coming in a very large measure in our favor. So clearly, that is the growth factor for ourselves, which is the reason why we decided to go ahead, allow a certain amount of equity to be divested, raise this money so that we can grow to the levels that we wish to grow to manage $1 billion over the next couple of years.
Okay. Next question. Dia Patel, can you elaborate on your rationale or name? This what message you desire to convey through this name?
Well, I just love the name Nisus. It took me almost 6 months when we were setting up in 2013 to decide. And then, what we realized, what is it that we can do? We really can't see the future. We really can't see how much money or profits we'll make, but we can make a lot of effort and put 100% in it. So there's a Sanskrit phrase that karmane devarastu mafaleshu kadachana. Do your best, leave the rest to God and Almighty for the results. So the one word for that in Latin is nisus, and that's what we signify. We put in our best 100% every single day we come to work for 24/7, and that's really what nisus does. Is creating infinite possibilities for ourselves and for our stakeholders by constant endeavor without worrying about outcomes. Outcomes, the markets and God will provide.
Next question. Deepak Poddar, what is the nature of income from investment that we had around 4.4 CR in financial year 25? How volatile this kind of revenue income can be? Some light on its sustainability would be helpful.
Sunil?
Yeah. So this is a part of our carried interest, which we'll receive from time to time from selling of our investments, and this is related to our funds. So generally, our fund carried it at 10% of the whatever the AUM we have. So we'll receive in next 5 years. So current AUM will receive the this carried interest in in over 5 years.
So, Deepakji, just to further elaborate, we are investors in our own funds. And when these funds wind up or some of these investments wind up, we get a very large share of profit, which is now being realized almost annually to some extent. I mean, of course, the largest piece will come maybe 2 years or 2 years later. But every year we realize a certain percentage of our profit. So we have invested in the debentures, I've invested in units of the fund. As the first fund is winding up or the second fund is returning capital, we're getting a very large share of the profit. So that gets booked as income from investment because that's our money which got invested, came back with its returns as well as share of the profits. So that's a recurring income, because we keep on investing and exiting our funds all the time.
Okay. Next question. Arav Banerjee, what is a fee structure of our transaction advisory services and how competitive we are?
Uh, so we play on, honestly, we don't we don't compete with any of the advisors or IPCs or other consulting firms because we're trying to put a comprehensive solution together. So effectively, let me give you an idea. So when we try to rescue a investment project or a development project which is having about 130 crore rupees of loan outstanding, or actually it had over 200 crores of loan outstanding with an existing lender which was not able to lend further. So the transaction advisory realized that it cannot be a simple transaction. It will have to be structured so that becomes investable. So first went in and restructured the loan and agreed to settle it at 130 crore rupees. Next, we said, well, that is only the first part. It needs further growth capital, and maybe the total money required will be close to about 500 crores. So then what are we going to do? We're going to syndicate a few people. So we brought the Government of India Fund, Swami Fund, to become a partner and invest about 300 plus crores. We got an ARC to do assignment because without assignment, then there would be a accrued profit for the haircut that is being taken by the existing lender. So there's assignment of the debt. Effectively, then we created a very comprehensive solution. So now you can imagine as a fund, we've invested, let's say, only about 70 crores or 80 crores from the 150 crore rupees or 130 crores that was required to rescue it. So we earn, let's say, our 2% on that. Okay, so about whatever, 1.4 crore rupees or 2 crore rupees on that. But on the entire 500 crore rupees of a solution that was created for financing the whole, the whole suite of projects and the corporate as a whole or the body corporate, one can charge 2% on that. So effectively, it becomes almost 10 crore rupees. So for putting together a large capital solution, we're able to charge on the entire value of the solution, either the entire fundraise or the entire GDV as well. So when you're doing a joint venture, you're charging on GDV. What is the total potential of sale in a particular asset? So that can be about 2% as well. So really, the advisory services are competitive that way, but again, they're very, very unique because they're able to provide a more comprehensive solution for capital seekers through divestments, joint ventures, and syndicating a larger pool of capital to create a more efficient solution for the capital seeker.
Hi Aurora, how many transactions have been executed in the press fund and what is their total value and what revenue have you generated from them?
Sunil, do you have any numbers on Viso? We've done what about 9 trades?
Actually, it is 7 trades,
7 trades
and
currently.
about 7 crores in financial year 24 we have done from the reso fund.
Understood. So 700 crores deployed, about
600 crores
almost
in the 7 days.
7 deals. Okay, we've done
Yeah.
7 deals, 700 crores, almost 100 crores per transaction,
Yeah.
and we would have earned roughly what about 14 crore rupees from that,
Uh,
from Viso,
yeah, yeah. Correct.
about 2%. Yeah, about
Yes.
2%.
Next
So
question.
Out of 44 crore rupees the last year, almost about 14 crore rupees would have come from Viso as part of the AUM, almost 2%.
Okay. Neeraj, what are growth strategies to enhance AUM? Where do you see it increasing in next 2 to 3 years?
So as I said, the first three funds themselves will total to roughly about 4,400 crores from the current 1,000 crores. And if I look at the Dubai fund, while I've only mentioned $250 million, we're in the process of raising another $250 million plus leveraging it 1:1. So looking to go to $1 billion as far as the UAE fund is concerned. As far as the India Special Situations Fund is concerned, we also have a feeder now from Mauritius and Dubai, which is looking to add another $500 million as a co-invest with our current 1,700 crore special situations. The value of special situations in India, in our assessment, as per GLL report, is roughly close to about $15 billion. That is the total value of assets that you can actually take over as loan or bad loans and restructure it and refinance it. We're looking at only $1 billion worth of investment. So just between the two strategies, we can potentially go to $2 billion, up from the 4,100 crores, which is the current AUM that we need to invest.
Next question. Abhilasha Kadam, how is Mauritius market? What growth opportunities do we see there? Any business development there till date?
So Mauritius is not so Mauritius is a jurisdiction that we wish to be present in because a number of our investors which are present in Europe, in Middle East, already have presence in Mauritius. So they would like to invest their capital through their current vehicles which are in Mauritius for the purpose of investing in India. So it's purely an investment vehicle for the purpose of investing into an India fund. There's no further activity in Mauritius.
Okay. Next question. Bimal Gandhi, other than Dubai and Mauritius, what is next regional diversification you are looking at?
So Dubai obviously the hub for the GCC. We're present in Oman. We're now trying to be present in Saudi, Qatar, and other markets. So we'd like to cover GCC extensively. Apart from East European countries, so we have allies in London, who's also trying to work the European markets for us and look at emerging markets within Europe, not obviously the developed markets where the big boys are, but emerging markets of Europe. So we continue to look at that. The next what we're looking at potentially is a VCC in Singapore. We have very significant interest from investors coming out of Japan, from South Korea, from other parts of Asia, which are looking to invest in India, but they need a Singapore VCC structure because they're present in Singapore with their family offices and institutions registered in Singapore mass. So Singapore becomes the next frontier for us to set up operations over the next 12 months and tap into that demand for investments in India for Singapore VCC for Asian investors.
Okay. Next question. Abhilasha Kadam, what corpus are we targeting for this NBFC?
So the NBFC is Nisus FinCorp currently is looking to add another 25 crores, which is part of the objects of the issue.
Next question. You want to continue?
No, expansion plans to buy how much revenue contribution. So as I mentioned, if today out of 1,000 crores last year we had nothing from Dubai. This year we expect that if you were to more than double, then Dubai will end up contributing almost about 35% of the AUM. Going forward, as I mentioned, it's $1 billion opportunity. So going forward, it will end up becoming almost 50% of the total AUM, 50% coming from GCC and 50% coming from India. So it's a very significant strategy. It's a very, very large market, and therefore almost equal contribution coming from the GCC markets in UAE, and equal contribution coming from Indian markets. In terms of operating margin in the UAE, actually it's much larger. We charge 1.5% and 50% carry in an India funds. In the UAE funds, we're able to charge 2% fee, 20% carry, plus an additional profit share. So the revenue pools in the UAE are much stronger.
Okay. Next question. Sai Arora, how IPO funding is helpful in enhancing your business?
So far, we've been bootstrapped. We had a few angel investors who helped accelerate the business when we started 14 years ago, which I bought back, and at a very large multiple. Now, obviously, if you need to expand, either we can wait for internal accruals to help set up new licenses, as I mentioned, in Dubai, in Gift City, Mauritius, etc., and wait for internal approval to pay for distribution. But then that is not helpful, because if we need to grow to 4x or 8x of where we are, we will need to immediately start operations in these jurisdictions and get our own licenses, because institutional investors want the licenses to be in our name. Currently, we have borrowed licenses, so we need to have it in our name, and we need to pay immediately for distributors who bring in global investors to our funds. So that's the acquisition cost. So we need to pay for client acquisition to augment our current AUM, which we can deploy, and to set up these licenses. So if we didn't do that, then the entire business plan would stretch out for another 3 years. So what we would have to wait for 3 years can happen in the next 12 months. So it's obviously a very huge acceleration tool.
Next, Chaitanya Deshpande, with most revenue generated from advisory services, can you explain its operations and its correlation with AUM?
So I gave one example of where we helped one company which had 130 crores of debt to be restructured, or basically transferred, or assigned to an ARC. So we have at least about 6 to 10 such large matters that we deal with in advisory services each year. It could be wherein so it's essentially very simple. When you look at special situations where it's standard credit, and a investee company or a developer is looking to acquire assets. For example, a developer came to acquire a certain asset, which would help grow their revenue pool and project profile, or GDV. We realized that there were multiple other projects with the same party. So the transaction advisory, therefore, obviously was able to go talk to the partner developer, add a lot more projects to the scope of the current investment or acquisition, and therefore the total investment ticket size for us also increased. So the more AUM we're able to put out, the more amount of advisory we're able to do, and vice versa. The more advisory we're able to do, the more AUM we're able to put out. So it's actually very, very correlated, because we don't see any investment the way it comes as a standalone opportunity. We see every investment that comes to the door as an opportunity to do multiple things with the same counterparty, because they're seekers of capital, they're seekers of growth, they're seekers to consolidate their business and grow it higher for multifold times. So obviously they're looking to grow, or they're looking to monetize, and it cannot be just one-off transaction or one-off investment. There is a multitude of them. So that's really where advisory comes in. So almost every alternate transaction. So if we did, let's say, about 7 trades in Rezo last year, almost 4 trades of that needed a very strong advisory solution. Each of them would have a potential of about 5 to 10 crore rupees of fees. So it's very, very strongly correlated. The larger the AUM, the more the transaction advisory fee.
Next, Rahul Jain, what is our current working capital cycle?
So we're very low. We have a very low cost base. So really, there is. And Sunil, maybe you can give the exact capital turns of working capital cycle.
So if I talk about the financial year 24, our working capital turnover ratio is about 10 times, which is very commendable. And if I talk about the trade receivable turnover ratio, it's 8 times of the turnover, which is if we go to the
So
numbers,
receivables turnover ratio is 8x, and working
yes,
capital turnover ratio is 10x.
yes, yes.
Okay.
Next question. Mahira Yadav, we have created various SPVs to handle different funds as well as businesses. What is rationale behind it, tax benefits or focus?
No no specific tax benefit as such. But the benefit is obviously very large, because for every fund we've partnered with a new partner, like in Nisus Nisus BCD, we partnered with BCD for special situations. In Dalma Nisus, we partnered with the Dalma Group. What happens when you partner with somebody for a very minority stake? You're able to get a larger sponsor commitment, because it's not then just your money, but also the partner is bringing GP commitment and adding a very large sponsor commitment to the funds that we're managing. Second is, it augments our distribution cost and our setup cost. They're also putting in some amount of capital to be able to set up new licenses, to pay for some distribution expenses, and so on and so forth. So it's so far just been a mitigation exercise for us to augment our own investment or capital base by bringing partners who can further invest into each of these funds and contribute to the development growth of these funds. And more importantly, it's also been a counterbalance when you have your own, and that is the reason why in my mind, many fund managers fail, because they always believe it was their money, their decision, and their outcomes. When you have a counterparty which is investing a significant amount of capital in the fund and in the GP company, very strong counterbalance, the ability to discover issues, the ability to argue, the ability to further risk mitigate our investment strategies and solutions. So it's, because of that, we set up an SPV, we create a LLP structure, we give a minority stake to a partner. They're able to then sit on the investment committee. They're able to also assist or query and create a counterbalance for our management teams. And because all decisions are by consensus, which includes the partners nominee, which includes our nominees, as well as the independent members, it creates a very robust investment solution.
Next question. Arav Banerjee, how do you want to justify the IPO valuation?
I'll leave that to Mr. Yogesh.
Thank you, sir. Well, if you see the company last year, I think year ending March 24, the company has closed the profit of around 23 crores. And in the first quarter itself, they have booked the profit after tax I'm talking about, which is around 8.35 crores. So I think on this valuation, the P multiple comes to around 13 times of the profitability if we annualize the numbers. And I'm sure that the plans which a company have in future, so based on that, the primary focus of the company, Amit ji, as well as a Beeline, we always have a focus to have and leave some value on table for the investor. So I'm sure looking at these numbers, the valuation seems to be very attractive. So that's it from my side. Thank you.
Next question. Nirali Mehta, how will you tackle high client concentration risk?
We don't have higher client concentration risk anymore. When we started, we had a fewer number of investors. They've grown with time, and because now we have a larger number of funds, we have a larger number of clients. So, and that is also why we are paying for. We're paying almost about 35 crore rupees to distributors to bring in almost about 35 new investors, which will further almost more than double our current investor client base. And that is why we are effectively raising this capital to be able to acquire new clients.
Next question. Because one of your funds is started with Dalmia. It is the cement family.
Yeah, so Mr. Gaurav Dalmia is was on the board of this fund. Yes, you're right.
Abhilasha Kadam, thank you for this. Wishing you all the best.
Thank you, Abhinasha.
Neeraj Apte, all the best for the IPO.
Thank you.
Ahira Yadav, all the best to everyone.
Thank you so much for your questions. It was really a pleasure speaking to everyone.
Yes, we have covered majority of questions. Thank you, Amit sir. Thank you, Mridula ma'am. Thank you,
Thank
Sunil
you.
sir, and thank you, Vijay.
Thank you.
Thank you. Thank
Thank
you.
you.
Thank
Thank you.
you. Thank you, everyone.
Okay.